This is the weekly review for the week of June 12th to June 16th, as well as this week's Sunday preparation. So, coming into the week, I didn't have too much of a bias. Um, I was looking at this order block on dollar index because the seasonal tendency suggests that dollar is going to be bullish for at least a portion in June. But ICT noted this swing low right here, and he said that if that swing low gets violated, we're going to see lower prices on dollar. And we see that on Monday, dollar traded back up into this inversion fair value gap. And then Tuesday on the 13th, we started breaking lower, and that's when ICT called on his live stream that we're going to definitely see lower prices on dollar. The only thing I really wish dollar did here on the 13th was close below the mean threshold of this order block, because that would have gotten me extremely bearish on dollar. The fact that it still closed above its mean threshold um, kind of had me uncertain because we were showing kind of both bullish and bearish signatures here in price. Um, but going on to ES for Monday, I didn't really do much on Monday. I felt it was a kind of sloppy day for price action. We had this SMT with Friday's high here, market structure shift down, and we came back up into this fair value gap in premium. But this was before 9:30, so I really wasn't doing anything here. And we took a high into the fair value gap. And at 9:30, I really wanted to see if we're going to get some nice displacement down and then come back up into this fair value gap here and then draw into that new week opening gap because it was a Monday and I was expecting consolidation profile, especially because Tuesday was CPI news, which is a big high impact news driver. So I thought the market would consolidate. Um, but 9:30, we really ended up kind of, and throughout the silver bullet hour, we just got choppy price action here. Um, we did create some equal lows on this candle, and then it did trade back up into the fair value gap, and after some time, eventually took those equal lows, but it never made its way down into the new week opening gap. Um, and then here on this candle, I noted how we had this displacement up here, uh, having a market structure shift, and then we got this RTO right before the lunch session, but that's outside the silver bullet window, so I wasn't, concerned about missing anything here. And then we ended up running up um, for the rest of the PM session, which I was not expecting at all. Um, this week as a whole did not really have a Judas swing. If you look at the daily candles, right, we just had that tiny little wick um, from Monday's open. So price was really in a hurry to get somewhere this week. So coming into Tuesday was shifting over to the September contract. That's what ICT said because it had higher volume. Um, so Tuesday we had CPI, and it was pretty clear to me that CPI tipped its hand that we're going to be bullish because back one day we set up some equal lows and equal highs up here, and then CPI did its business and it took out both sides of the marketplace. Um, but we had an SMT here, and then after CPI, a shift in market structure up. So that was that displacement up was the key for me to start looking for long setups. And we also left a 15-minute imbalance here. the lower time frames were not as clean for the imbalance. Had a small M5 imbalance in here. So down on the 1 minute chart, I noted how we traded back down into that M5 and M15 imbalance. And we had a shift in market structure here. And now we started to respect bullish PD arrays. We came back down into the fair value gap here and then traded up to take the buy side. Now, I noted that this fair value gap here and this order block here didn't end up being respected because price already took this buy side. And we ended up retracing down one more time, taking out this low here. And we also had, I forgot to mark it on the chart, but we also had a YM SMT here. And after that, we got displacement to the upside. We came back down into the bullish breaker and fair value gap here. And then this was now in the silver bullet hour. We had another leg of displacement up here. And on the 2 minute chart, it was a little bit cleaner. This was the setup that I noted because price had already started respecting those bullish PD arrays and had yet to take buy side. So we had a shift in market structure and then that compound entry here in the fair value gap and bullish order block here to target the buy side. And I noted in my journal the difference between this setup here and this setup here that failed with this 1 minute fair value gap and order block here because we had already taken that buy side liquidity, where here on this entry we had yet to take the buy side here. So then going into the lunch hour, we didn't exactly have consolidation, but overall from the AM session here, we did consolidate. And this was because we took that August high. So the weekly high here from August, we took that on Tuesday, right here. And that's why I noted that price in general from the AM session all to the PM session was in a consolidation profile. And the silver bullet that I noted for the PM session was how we had this shallow raid of the AM high. And we had SMT, but I wouldn't take this directly just because that looks suspect to me, like equal highs. But now here we started to respect bullish or bearish PD arrays. We came up into the fair value gap, respected the high of that fair value gap on a closing basis, and then had a shift in market structure here. And this was, I believe, a M5 fair value gap. In here, yeah. So we had that market structure shift. So the liquidity that has yet to be taken was that lunch low that potential stops would be trailed to. So I felt that the lunch low was going to be the obvious draw on liquidity for the PM silver bullet session. All with the backdrop that we took that August high, weekly high, and I believe monthly high. And that's why we see this big consolidation within the AM all the way into the PM session. And also the fact that we have FOMC tomorrow on Wednesday. So going into Wednesday's trading, I was also expecting the AM session to be consolidation because PM was FOMC, and that's kind of what we got. Um, so I noted how at 9:30 we took out equal lows and dipped back down into this fair value gap, but closed above the mean threshold of that fair value gap on M15 right there. So the wicks were doing the damage, but the bodies were telling the story, as ICT says. And then we had the displacement up. And that's where I got in at the fair value gap. So initially I had a limit at the bottom fair value gap. So this is still something that I struggle with, is that I wanted an entry in this bottom fair value gap in here because it was coupled with the breaker. So I set limits like right here on this 950 candle, and I had a limit right there. So inside the breaker and that bottom fair value gap, and also in discount. But then when price was dipping into this M5 fair value gap here, I had a market entry in, and I was fine getting both entries just in case price dipped down into this bottom fair value gap here. But we ended up leaving it open and just touching the top of the breaker, like to the wick. So the high of this was 422, or 421 rather, and then the low of this candle was 44.21 as well. So that was perfect, and then it immediately went up to the equal highs buy side here. So one of the things that I noted is just, or one of the questions that I noted, I mean, was how do you know that this fair value gap is going to stay open, right? Because I kind of hedged myself. That's why I marketed in here, but I was also okay with price dipping down into here and tagging in my limit entry, and then I would have just got filled on two positions, because I was pretty confident that price wanted to draw up into this buy side after taking sell side here and respecting the fair value gap mean threshold. So that was really it for the AM session. I just noted how here we ended up having a market structure shift, respecting this inversion fair value gap, and then we had FOMC 2 p.m. For me, the entry wasn't super clear because we didn't have a very clear fair value gap form, but the template for FOMC still played out. That ICT showed us how the first move at 2 p.m. is kind of a fake move, and then the 2:30 price action ends up being the real move. So we had that Judas, and then here around 2:30 we had that market structure shift and came back down into this fair value gap here, and order block here, and then ended up trading higher to take the buy side above the FOMC high. But personally, I would have liked to see more clear displacement up, just like we had on the AM session trade here. But yeah, that was FOMC Wednesday. And in Thursday's trading, still had that bullish bias. Early in the AM session, we had a breaker form after price took sell side here. Equal lows, had that Judas swing, displacement to the upside, and then very shallow retracement into the breaker and into that fair value gap. Again, we leave this bottom portion here as a breakaway gap, and then at 9:30 we just immediately rocket up to take these equal highs and previous day high here. Once I saw this form just prior to 9:30, which is where I was looking for an entry. Um, I had a previous day high as my drawn liquidity because of this Judas swing and displacement away from it, but we didn't get an entry here um, into previous day's high. So what I noted was to see if we're going to dip down into any of these fair value gaps here, but I didn't want to just blindly buy one of them. I wanted to wait for a sell side raid, and that's exactly what we got here, where we took sell side with SMT, had displacement up, market structure shift, and then we had this order block here. And then if you drop down to an M1, it's a little bit cleaner, and we had that 2022 model form there. So if we're bullish, we always want to see sell side being taken out, and that's exactly what we had here. Sell side taken out into a fair value gap. We can trust that it's most likely not going to retrace down into these other fair value gaps down here. Market structure shift down into the breaker. No fair value gap here though. It was just a breaker and an order block, and then price ended up trading higher, going deeper above previous day's high. And then coming into the PM session, it tipped its hand that price wanted to go higher as well, because here we had that lunch classic consolidation, took a lunch low, running the stops of anyone who had their stop trailed below that lunch low with SMT. A little bit clear, I think, on the 5-minute where we broke market structure here, back down into the breaker and fair value gap. But you can see we've been having very shallow retracements the entire day. So price was extremely bullish. Price is not wanting to retrace even into a discount of these short-term dealing ranges. It's just breaking market structure, slight dip into the breaker and fair value gap, and then it's off. But then we got that PM silver bullet here, where we have the high of the weekly fair value gap, which is this one right here. So price showed an unwillingness to have bearish displacement from that August high. And then DXY was also conversely just melting down. So we had this 5-minute fair value gap here, price respecting the high of it, the body's closing all above it, and then dropped down to the 1-minute, and we had the 2022 model form inside that fair value gap, where we had a SMT here, displacement up, and then came back down into the fair value gap here, and the order block, and the mitigation block here. And then it was off to take the buy side above here and the high of the weekly fair value gap. So then going into Friday's trading, I was anticipating a potential TGIF Friday with a retracement into the weekly range, and we saw that here with the 9:30 open giving the displacement down. So we had this Judas swing above previous day's high, and also the 8:30 opening price, and had displacement down, market structure shift, violating all of these bullish PD arrays here and creating equal lows. So I felt that this was just a no-brainer short, and I got in right here at the fair value gap and premium and also the breaker. But I ended up closing the trade because we had this candle closure here above the fair value gap. I should make these different colors. So this M5 fair value gap that I was watching, we closed above it, also closed above the breaker, and we had a market structure shift here. So I ended up just closing the trade, but the thing was that there was also an M4 fair value gap that we did end up respecting here. And we didn't close above this M4 fair value gap. And that, really that, the M5 body closure right there at the high of the M4 fair value gap. And the trade obviously ended up playing out, but I got out for like a 0.5 R loss here. Now, I ended up getting back into the trade on this compound entry here after we had this market structure shift. Got in at this fair value gap here, put my stop above the fair value gap high. I thought this was going to be a IOFED down into the sell side, but we ended up having a very deep retracement, taking me out and then going down into the sell side here, the equal lows here. So even though I called the draw on liquidity, still had 2 or 1.5 R loss on these trades, and that's because we had this also lower time frame fair value gap here, M3 fair value gap that price wanted to trade up into here, and it, even though it disrespected the high of this multiple time frame inefficiency that I went short off of, again, there was still that small little fair value gap up here that it wanted to dip up into and then go down. But we see that this was a high resistance liquidity run condition where price was really just kind of consolidating in here before eventually taking out those equal lows. So this was definitely a frustrating day that, you call the draw on liquidity and everything, but you still take losses because price is in a high resistance liquidity run condition and not just easily moving to those targets that you identified prior. And then that was really it for Friday. So pretty good week in terms of setups. There was a lot of stuff to take advantage of with the clear bullish bias that we had on ES. So going into next week, I feel like it's kind of tricky because we closed above the mean threshold of this fair value gap here, which indicates bullishness. And then I just noted the CE of that and the gap here. And DXY looks bearish as well, violating all of these arrays, and we have these equal lows below price. The only thing is I'm still watching that seasonal tendency, and it suggests that in the second half of June that we should be bullish. So I think that I'm just going to wait for more information to see what happens. I don't know if this is going to be like an OTE and we're going to go higher, because ES also has a set of equal lows down here. Tuesday and Wednesday low here, and then we have this daily fair value gap in here as well. And then we have this low resistance liquidity run. So I'm thinking that if price closes below this daily fair value gap here, we could potentially use this as an inversion fair value gap, and then it's going to go lower to take those equal lows and dip into this daily fair value gap, right? And then we're going to have to wait and see what the reaction is going to be off of this fair value gap after we take that liquidity. So I think it's best to just wait for more information to see how we close below this daily fair value gap. But also I'm going to potentially be watching for a short into this low resistance liquidity run here. But that, I think, if we get a retracement down into these equal lows, then we could equally have retracement up into this fair value gap here, and then maybe this breaker here. There's not really too many clear PD arrays here on the daily chart in terms of fair value gaps, and the only other high is all the way up here. So yeah, what I'm just going to be watching is to see if we close below that daily fair value gap, and I think that will give us the bias for the week. And then in terms of news, Monday is a holiday, so we have a kind of truncated week. and we have some Fed jawboning, as ICT would say, both Wednesday and Thursday. So that could probably make price action a little bit tricky. We're probably going to have some big volatility coming in at 10 a.m. So going to be watching out for that, but still good medium and high impact news scattered throughout the week. So yeah, we'll see how this ends up playing out.